Hello, 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 everyone. Mike Arnold's here, co-founder, Path Trading Partners, along with probably soon to be here, Bob Iacchino. Hopefully, Bob will be on soon. How is everyone doing that afternoon sell-off? Wow, pretty much sums it up. Boy, that escalated quickly. So, let's see where we are. Let's see where we are. Let's see who's here. Hey, Waka Waka, what a rug pull. It was great trading. No momentum bars. You got that nice pause, and then you got to ride it down to some key targets. It was very nice trading in the afternoon. The morning was absolutely horrible. I don't think it was related to the ECB because the morning held up really nice. It was this afternoon once we got momentum and broke those key levels. And did you see the closing imbalances today? Whew. They were huge. So, okay, here we go again. Blame it on Elon. All right, these people are absolutely clueless. I was starting to see this rolling across. Nothing to suggest recession is in the works. Okay, whatever you say. What world is she living in? It's not this one. Kathy Wood better start fattening up. I don't know what's going to be left of her fund after this next leg down. Well, people are still dumping money into it. So once she starts getting massive redemptions, it's going to be interesting. I don't think we're going to have a recession. What else? Wait, hold on. She said something else here. Uh, Amazing how pessimistic households are given job gains. Okay, have you gone shopping though? You know, your wages have not kept up with anything. Go shopping. Go to the friggin' grocery store. Go fill your car up with gas. Well, unless you have an electric car, but it's still more expensive to charge it. And these friggin' politicians. And then go, who could expect, and we're going through the news feed now, car makers would be hit by chip dearth? Are you, oh, let's see. People were talking about that like over a year ago with supply chain issues. Yellen says she would not change policies if she could go back in time? Really? All right. All right. I'm done. I'm
You're done
done.
already?
I'm done.
You can't be done.
Hold on. I'll bring on Bob in a second. Wait, well, let's see. Let's see. By the way, if you are new here and you want to hear me rant after Bob's gone again, then stay tuned and please consider subscribing and don't blame Bob for my mini rants or macro rants or 2 rants in a day because my head is going to friggin' explode at this point. So, that's where I'm leaving it, and I'm just bringing on the Magic Bob button. Magic Bob button because on the screen behind me, we have in the CPI numbers out tomorrow, preliminary Michigan sentiment, but the real driver is going to be those CPI numbers first thing. First thing, 7:30. You still have time to come on with us at 8, Bob?
Yes. I will
Okay.
say, though, I didn't hear what your rant is, but I'm trying to figure out right now if it has something to do with Chamath Palihapitiya or Elon Musk.
No, it has to do with Yellen.
Oh, I might like that one.
Well, stuff like Yellen saying, I don't think we're going to have a recession. If she says she would not change policies if she could go back in time. What? Okay, what? Knowing what we did not see the supply chain issues and the ship shortages coming. Then you had your friggin' eyes closed, and you wouldn't go back in time to change anything.
So listen, really quick, something everybody should know about Janet Yellen. In 1990, her and her husband, who was a Nobel Prize winning economist named George Akerlof, wrote a paper, and the title of the paper was The Fair Wage Effect Hypotheses. Now, you can still find it if you want to read it. That particular paper basically says that people who get paid less work less. In other words, if you come and you say, well, how much is this job? $9 an hour. Okay, I'm going to put forth $9 an hour worth of work. But if you say, how much is this job? $12 an hour. Oh, okay, well, I'll work harder because it's $12 an hour. So I'm going to give you $12 an hour of work. So what they basically said is the solution to the problem of underperformance on the lower end of the socioeconomic strata is to pay them more so that they'll work more. And that will allow for a productivity boost that the entire economy will benefit from, and inflation won't be a concern. And therefore, inflation should be allowed to run until unemployment virtually gets to zero. So, yeah. So, and they started with what they called a unity baseline, which was I'll pay you $0, so I'll do zero work, which makes sense.
Well, yes. No, but some people
Makes
still work
sense.
for free, but it's not normal.
But here's the part about her and her Nobel Prize winning economist husband, George Akerlof's paper, that I think is pure economic fiction. Inflation tends to outpace wage gains, like by a lot, historically. So if I say, Mike Arnold, I'm going to pay you $50 a week to mow my lawn, I'll get $50 worth of work, right? You'll mow my lawn for $50 worth, right? And then you go out and you take, well, all right, you don't want
Hold
to mow
on,
my
wait. I got
lawn.
a question though. If I
Yeah.
agree to mow your lawn,
Yes.
and you say I'm going to pay you $50, do I go like I'm about 2/3 done and go, that's about $50 worth, I'm just leaving? No,
Well,
I
that's what they
finished.
say.
No, because
That
people.
again, their paper assumes that the equation begins at the sum as opposed to the parts, right? It's as if I said to you, I'm not going to show you my lawn. I just want to pay you $50 to mow it. And you go, okay, fine. And then you walk in and go, wow, this is $100 lawn, but I agreed to $50. I'm only going to do $50 worth. That's the assumption they're making. That would actually be correct.
Yeah,
If I
but
said, I'm not showing you my lawn, but I'm giving you $50 for
well, first off, I don't really want to see your lawn. Second off, let's just start there. Uh,
Okay, let's go
all
back
right.
to this.
If you're stupid enough to sign a contract for work
Yes,
that you don't know what it is, but you still sign the contract, so if you're an ethical person, you're still going to perform the work, and then you can always say, I'm renegotiating the contract.
Well, this is exactly what I mean. First of all, there's very few ethical people other than Mike Arnold. But when you look at it from this perspective, the whole paper assumes that the people agree to the work for the money under the premise that they're only going to do that amount of work, not the work you asked for, which that's not what happens when you take a job. I've actually never negotiated a salary. I haven't had a salary since 1997, but I've never negotiated one. And I've never actually negotiated a deal that we've done either for Path Trading Partners or for myself. I've said, you tell me what it pays and tell me what the work is, and I will tell you yes or no. That's how I've always done everything. And most of the times I say no, they're like, wait, there's more. I'm like, then why didn't you offer me more? I'm not negotiating. Tell me what more is. I'm actually not negotiating. Anyway, back to their paper. So Janet Yellen truly believes, and she testified this in her hearings to be Fed chair, that she believes inflation should be allowed to run hotter in order to achieve full employment. So when she talks about she wouldn't have changed policy, she wouldn't have. Like she's not talking the administration line. She truly believes inflation should be allowed to run. The problem is, if Mike, you do my entire, let's change it from lawn. You fix my car engine for the $50, you fix it $50 worth, which completes the job. And then you go out there and you find out that grease you need to work on an engine now costs $80. The next time you come back, you're not still going to accept 50. 50 is no longer the wage. It's now 80. In other words, inflation drives the wage, not the other way around. It's not like everybody now has enough money to pay for things, so inflation stops going up. That's not what happens. Actually, the reverse happens. Because Milton Friedman's definition of inflation is still the best one I've ever heard. Too much money chasing too few goods. Now, she says the boost in productivity takes care of that. Now there's more things, but no, it doesn't. It feeds on itself and it grows. We've gone too much into it because I missed your rant. But my point is that she has believed this since she wrote a paper with her husband. It was 1990. So she's not lying. And she's not trying to defend the Biden administration's stance that inflation is the Fed's problem. She really doesn't think it's a problem.
How'd you explain then high unemployment and hyperinflation?
I don't. It's her stance. So I
I
don't have
mean,
to explain.
wouldn't that contradict her paper right there?
Yes. Yes.
So how can it
She
be a
wrote it in
legitimate paper? Because we've had
1992.
hyperinflation, not in this country, but other countries with very high unemployment.
Well, they weren't getting paid enough, is what she would say.
They were carrying around wheelbarrows to buy bread.
They were getting paid nothing, is what you're saying. So how is there still hyperinflation? Because it's a currency phenomenon. It's not a labor-driven phenomenon. Anyway, supply is largely driving inflation. So,
hold on. I just gotta hold on. Well, you gotta say hi to a couple people besides
go ahead.
Kalani. Hey, well, Kalani has a question. Former, what is that, market maker Cam Carson said the stock market is derivative for the option market. Do you share that opinion? It's a derivative for the option. I mean, I
No, because
don't.
the stock
I
market
think the
exists.
option market it is a derivative of the stock market.
That's like saying the Jeffersons was a spinoff of All in the Family. It's the other way around. Options markets are derivative markets. They're derived from the actual market. So he's just factually wrong there. Now, I'm sure he was trying to make some sort of philosophical point. Maybe, when Mike talks about negative gamma, that's the type of point he was trying to make. Whether we have negative gamma, options market can drive short-term moves in prices. But
Yes, but it's not the overall.
it is absolutely not.
No, because you wouldn't have the option market without the stock market, and
Right.
you wouldn't have phenomenon like all your buildup of negative gamma and everything unless you were positioning stuff in the option market based off what the stock market was doing or was expected to do.
Right. There's got to be more to that, but I don't know what
So
it is.
I did, yeah. Hey, Coco. Coco thinks it's a bear
Go,
track.
go.
Hey, Davey. AP's World. Wow, wow, wow. Hey, Anissa's back. Good evening. Daniel, every
Anissa
action
got,
is an
Anissa got the full force.
overreaction.
Anissa got the full force of the gold is not an inflation hedge conversation yesterday.
And she's still here.
Yeah, I know. I'm surprised because I think I talked for 15 minutes before the guy was like, okay, that's a lot. Can we unpack that? I was like, oh, shit. I rambled. Anissa, was it too much? Let
Hey,
me know.
Patrick. Welcome, welcome, welcome. Rich. Oh yeah, DocuSign taking. They had a miss, but I was focused on Stitch Fix after the close. That's my personal favorite, because that's where I do all my shopping for my threads. Uh, Bob's must not be on a green screen. No, Bob's got a brick wall behind him.
Got a brick wall behind me.
Well, you did some great mason work, Bob.
I know. My dad was a mason. I'm making that up.
Wavy's going for the CPI crash party. Uh, I don't. If Japanese yen will go up as high as 150, are the markets in trouble? I'm asking because the ECB number is bad and people run to the yen. Sorry if you don't understand.
No, I do understand, John. If so, the yen is still a flight to quality currency. So if you see a yen rally in this, it's likely because equities have fallen and the view of global economies has fallen off a cliff. So I don't know about the 150 level. Maybe Mike can look at the yen chart later, but just in general, if the yen stops falling and starts rallying, as a matter of fact, today the dollar was up against the euro by 1%, up against New Zealand by 1.15, up against the Aussie by about 0.75%, up against the pound by 0.25%, and unchanged against the yen. So there's a tiny bit of flight to quality in there.
And and the yen's approaching its all-time record high 135.15, set in 2002.
Anissa, are you still here? I'm curious if yesterday was too much. Like if I
Uh,
was just, I don't know. Go ahead.
let's see. Puts were a printing press today. Yeah, it was interesting. So, what are your thoughts going into CPI tomorrow? What's your Bob crystal ball say? so we can bet it all.
Do you know that document is? Did I email you that document?
Yes, yes, it's sitting
Is it
here.
Bob? Can you put that up on the screen or
I
no?
will
I don't know
put
if
it
it'll.
up here. I I got distracted by my rant.
That's okay. I hesitate. I hesitate to say what I think about tomorrow because there's a high probability that I'm wrong about it. Um, basically, and I don't want people to necessarily take trades based on this. Okay, but yeah, I can't even read it. Um, I'm just going to read it off my computer if it's
Here,
better
hold
because
on.
this is.
Can I zoom in on this? Hmm.
Yeah, I mean, I guess so, but
Let's see. Is
it's
this a
still.
graphic or is
You're gonna
this
have to
a?
talk about
Hold on. Hold on. Let me try this.
it.
I want everybody to read along. We're gonna let me do this. New document. Here we go. Now I can probably make it bigger. Now I can probably make it bigger because now I can. That
Wow.
might be a little too big. There, look at
No,
that.
that was fine as long as that was on the full screen. I really like that big type, but that's okay. Um,
Can you read it
so
now?
this particular channel asked me about. They said we want to talk about jobless claims number, and they want to talk about CPI. So I basically said the jobless claims number isn't really useful right now. It was useful during the pandemic, but other than that, we're sitting around 200,000. Which, if you look at the chart that I attached that as well. We're sitting basically at a level that we always sit at in jobless claims. Okay, jobless claims is basically we're around 200 to 250,000 all the time,
You mean this
unless something
chart?
happens. But yeah, I sent you one with a line at 200,000, but that's self-explanatory enough. Um, so jobless claims right now, it was valuable during the pandemic. It's not really that valuable right now. And I think jobless claims will get worse in the future. Companies have brought on hiring freezes, and people need to reset their availability for jobless claims, right? Unemployment benefits have expired for so many people that they now need to work and get a reset before they can apply for them again. But you'll probably see a little bit of a spike when some of these layoffs and some of these hiring freezes start to affect the markets. But essentially, jobs numbers lag. Okay. CPI, on the other hand, is a top one or two economic figure for right now. So President Biden was on Jimmy Kimmel, and he said that inflation is mostly food and energy, except that it's not, because the last core inflation figure, which incidentally is ex food and energy, was up 6.2%. Now, I hate misleading and untrue statements, and I say misleading and untrue because I don't know if President Biden knows. I wouldn't call what President Biden does lies. I really wouldn't. I He's a lifelong politician. I don't think he knows that much about the economy. He's being fed this stuff. Anyway, wages are not keeping pace with this level of inflation. The last reading of US employment wages quarter over quarter only increased 1.2%. For the last two consecutive months, the primary consumer expenses, which is fuel, power, and food from your grocery store, have all been rising at a double digit annual rate. And that's the first time that's happened since 1981. So we're now starting to see a shift from goods inflation, which may be part of the reason we get a lower headline figure in the next couple of CPI readings. That's my opinion of tomorrow. I think tomorrow, the headline number year over year is going to miss. Anyway, we're getting a shift into services inflation. Now, services inflation is stickier, similar to wages, like wage gains, because people with services, it's a person's perceived value of their work. So this brings behavioral economics into it, right? I think tomorrow's print might be lower than expected on the core and on the headline, but then I think the June print could be much worse because the drivers of inflation, which are food, power, and energy, apply to everyone and every business, right? And if you look at the last couple of weeks of crude oil prices as an example, crude oil prices only started to rise about the last 2 or 3 weeks. It's not going to be in this number. So I think the headline number can miss. right? If you look at a crude chart, we're going to get the CPI number is what's May's figures, right?
Mm-hmm.
So if you look at the month of May, crude was in a range. It only spiked toward the end of May, right? So I think the headline number could actually be lower, and that might cause the rally that we're looking for off of the double. I've said this before in terms of technical analysis and price action analysis is the steering wheel and news is the gas pedal. And what Mike does every day for you guys is he tries to get your car pointed in the right direction for when something hits the gas. And I think CPI could be the thing that hits the gas tomorrow. But I don't want anyone to trade that. Okay. I don't want anyone to trade that because I could be so terribly wrong. This is just my opinion. Right? White House official telling me,
Just read it.
they were telling you, Waka Waka, telling me they expect headline inflation will be elevated because gas prices were 8.5% greater in April and May. Then what? They weren't. Look at the chart. In March, they were up. It will seep into core inflation through airline tickets because of the price of jet. See, they're no, absolutely not. Okay, that's absolutely not true. Look at crude oil here. The spike was in March. If anything, at the beginning of April, crude oil was falling. Now, it doesn't seep into the core because of airline tickets. Okay, it doesn't. It seeps into the core because of dry cleaning, accountants, lawyers, landscapers, service economy is when it starts to seep. And service economy is sticky because again, people, if I'm your dry cleaner and I say, shirts are now $16, they're not $15 anymore because all my costs have gone up. A few months later, when my costs go back down, if you come in and go, are you going down to 15? They'll go, well, the other guy didn't. I'm worth 16. They don't lower those prices. People think their worth is what they're getting paid right now. And when they get a raise, they think that's their new worth. And it may be. In most cases, it's not. But it may be. So services, economy, inflation sticks. Now, the White House, again, this is not political, guys. It would be the same thing if it were Trump. If it were Trump, Trump would be blaming, oh my God, he'd have fired Powell by now. But the White House is saying now, and Janet Yellen has always believed, that inflation is the Fed's problem. And Janet Yellen has always believed they shouldn't be doing anything about it. And that may have been part of the reason why Powell didn't do anything in May. Now I'm speculating and ranting, is because he wanted to be reappointed and he knew Janet Yellen's endorsement would go far to getting him reappointed. No, I know, Waka Waka. I'm sorry. I get upset about this stuff because this stuff is very misleading. I think if a politician would ever come out and go, yeah, we probably shouldn't have done that third stimulus check, but, we thought people needed it. And now they're spending it and it's causing prices to rise. So there's going to be a little pain, but we're going to do everything we can to readjust things and not have you feel the maximum amount of pain. But I don't know if there's a lot we can do about it because we made a mistake with that third check we sent you. Because a lot of people wouldn't say, well, why'd you send it to me then? They'd go, yeah, I needed that check. All right, fine. Now, maybe they wouldn't say fine. They're always looking for somebody to blame. So Janet Yellen, Rich, sorry, Mike, I'm going ahead here. Janet Yellen doesn't believe the Fed's going to have or the U.S. economy is going to have a recession because she believes her theory. She's wrong. She's very wrong. Look at the ECB. Am I leaving you any time for anything, Mike?
Yeah,
I'm sorry.
Just keep going.
The ECB today upgraded their inflation forecast and downgraded their GDP forecast. What is that, Mike?
What stagflation?
That's stagflation. There's a worst possible outcome for the economy and individuals that are watching us right now. For your own economic situation, the worst thing is stagflation.
Yep.
I guess nuclear war could be worse, but I'm talking about economic things.
Would,
It's just not honest, and I understand why they're doing it because they're in the business of winning elections. They're not in the business of fix. This is not Republicans and Democrats alike. Somebody called me Bob Trump in here the other day, and it was funny, but absolutely no. Politicians are in the business of winning elections, and they do and say things to get elected again. They don't do things to help you. Now, I'm not trying to be altruistic here. That is their actual job. The product that they sell is reelection. That's what they sell. So when they brought Powell to the White House, they said, look, do what you got to do. You're not going to get pressure from us because we're going to blame you. And I'm sure he walked out of there going, those mother. And so that's the part of me that makes me think he's just going to hammer it. Fine, you want it, you got it. I'll hammer it. I don't know. If he were Italian, that's what he'd be doing. He would have tried to get them to raise rates 150 basis points at the first meeting.
speaking
I'm getting
speaking of the ECB, I mean, a quarter point hike, then maybe 50,
maybe 50.
maybe.
She said that if the inflation gets worse, which is their prediction, then a larger rate hike could be appropriate in September. Well, what, 26 basis points?
I mean, are
Everyone assumed that meant 50.
but does anybody really want to tackle this, or are they just hoping it's going to go away?
They want it to go away.
But that doesn't. Well, it could. At least it won't probably last a decade, according to Yellen from yesterday.
Look, here's what you're going to see if and when the Republicans take over the House and possibly the Senate. If they do, I don't know if they are or not. I'm not predicting it. The Republicans are going to be talking about the Biden inflation like they talked about the Trump job losses. They're literally going to steal from the Democrats' playbook and say, well, we're still trying to get us out of that Biden economy. They'll use it for 7 years. 7 years, they'll use it. That's why I'm saying it's not a political statement.
Yellen said
I'd like to talk to Daniel.
when I
Go ahead. What?
said that inflation would be transitory, I was not anticipating a scenario in which we would end up out contending with multiple variants of COVID. But that's been. We had multiple variants like from day 3. And there was predicted. They said this is going to mutate. These people.
That's such bullshit.
I'm just tired. All right, Daniel, after my 30 years in the government, you guys talk like they make sense. They have entirely different perspective.
I don't know if you mean us guys or the people in the chat, Daniel. Their perspective is winning elections. It's not solving any problem unless that problem aligns with winning the next election. That's my view. I think that's what their perspective is. I can't see any other perspective. And if what I'm saying goes against your 30 years, I'd love to hear what it should be. And I'm not being sarcastic or not being an asshole or anything. I really want to know what you mean, because from my perspective, I have never seen a Republican or a Democrat. Probably the last one I saw that actually sounded like he wanted to fix things was Ross Perot.
Well, Dr. Michael, where's
that's funny. I didn't see that. Yeah, I wish we could give people the microphone sometimes.
So, yeah. Oh, well, boy, I went on a rant this morning.
That last comment, that is so upsetting.
This is all just a bunch of,
Even if you believe COVID caused inflation, it still wouldn't be COVID that caused it. It would be coming out of COVID. Now, she's trying to say that COVID affected the supply chain. It's the response to COVID that affected the supply chain. You take something so simple as like mining, copper mines in Chile, which is the biggest mining country of copper, and they would shut down mines to try and stop the spread of COVID. But then the second that they could, they would reopen them again, right? And supply got back really quickly. It was the demand outstripping the supply. And that was caused by too much money in the system. That's what that was caused by. If you're not able to consistently replenish your supply because things are shut down, yes, but that's the cause of the shutdown, not the cause of the actual disease or pandemic. So it's an effect of that. But we did not have, the only place that had multiple shutdowns based off of different variants was China and some of the states here, but we don't supply anything anymore. We're a services economy.
Rich says China causes supply chain issues.
Some of them, not all of them, but some of them, sure.
Daniel following up, ask the government if people are more productive when we pay people not to work and farmers not to farm.
Thank you.
The government would say they are more productive.
Okay, so we're on the same page. They're more productive because they vote for you if you pay them not to work. That's the productivity they're looking for.
Hold on. I'll get back. I see your comment strategy. Hold on. John A., are we going to see a housing market crash with inflation or stagflation?
A dip. I wouldn't call it a crash. I would say we're going to see a significant dip, but I don't think it's going to be as bad as 2008 because we don't have as many subprime loans out there, not even close.
Here, Patrick, this is therapeutic. You guys are my coping mechanism. Oh, no.
I'm glad my mental pain helps you cope.
Strategy Freeman says, what was Bob going to say about the Chamath con man? You got that right.
It's on my Twitter. It's pinned on my Twitter if you want to see what I think of him.
So now I got to go to your Twitter? I didn't see you tweet.
No, I basically said as a theoretical, I'm not a member of the financial media, but I'm still a frequent guest. I posted Chamath saying he would never sell Twitter on CNBC. I'm sorry, Tesla. And then I posted him saying that he sold all his Tesla like a month later.
Yeah. Oh, I remember that. That's
yeah. And his reasoning was basically, look, I have to fund other projects. Sometimes I can't hold things. You're a freaking billionaire.
And then don't go on and tell, as you're dumping it, you're telling, right. As you're literally, because he didn't sell it all, he didn't wake up one day a month later and say, I'm just dumping it all. He was selling what he was telling everybody he wasn't going to sell. That's the problem.
I'm going to retweet it right now. And if any of you guys don't follow me, if you're active on Twitter, I'm not trying to make you, I'm not trying to get you on Twitter, but I just retweeted it right now. So if you'll follow me right now, it's not only pinned, but it'll be at the top. Yeah.
Oh, boy. Oh. Here we go. Dr. Michael, thanks, Mike and Bob. Great having you after summer slow day. Well, the afternoon wasn't that slow. So any other thoughts, Bob, before... So Yellen says, I absolutely expect growth to slow down. Well, but we won't have a recession. Are they just drinking they're drinking it.
Yeah.
I don't understand. So they think literally they could soft landing it down to 0.1% GDP and then it's miraculously going to just bounce?
Nope.
Oh.
No soft landing is possible.
Let's see. George, Bob, wouldn't rising interest rates, layoffs, and declining savings turn out to be equal to the effects of subprime?
That's actually really well said, George. I don't know that math though. I don't know how to work that math. A lot of the times, one of the problems with subprime is that mortgages were being made to people who didn't have the income to pay the mortgages. And then when the banks repossessed the house, the house was very much overvalued. So there were zero doc loans, there were no down payment, 1% down payments. So when the banks started repossessing, they were selling off into a declining housing market. They couldn't recoup their losses. Um, I don't think that's the case now, but that's a very good point, and you may be right. I just don't know the math of it, so I'm not necessarily willing to say it. But you could be right about that.
The only warning sign to me, and I talked about this a couple months ago, when people were able to take photos of their bank statements for income
Exactly.
verification. No, so there might be some of that. I don't think it's as bad, but we could, if some things really unravel, it could get far worse than we think. But Strategy Freeman, just read it. That's why I love seeing you interviewed. But I had no idea. I have no idea how you still get booked. You're too honest. How do you still get booked, Bob?
Not honest on TV. Okay, so look, you
Oh
can,
man,
you can't play a video on this, right, Mike?
I can actually. Some yeah.
Okay, so I'm going to show you some of the. I'm going to send you something right now. Okay, and I want you to play it for these guys if you don't mind, because this is exactly. It's not exactly, but I don't get booked on CNBC anymore, and part of the reason is because I told them to go fuck themselves. Okay, and it was because they asked me to say something I wouldn't say. They asked me to take a position that I wouldn't take. Okay. Um,
Hold on.
I'll tell the story another time because I've taken up a lot of time today. I
Jeez.
just texted you a video, Mike.
Yeah. Hold on one second.
You're also in the center of the screen.
I know I
I
am there.
still I still get booked on outlets that allow me to speak. One of those is Bloomberg Canada. Bloomberg US does not allow me to say things anymore. Yahoo Finance allows me to speak. Cheddar allows me to speak. TD Ameritrade allows me to speak. And RFD TV, which any of you are in the center of the country, it's on your cable system. If you're on the coasts, it's not. You have to subscribe to it. So those are places where I can speak honestly. Now, this particular video I sent Mike was a very mild example of the way that I spoke on CNBC. That was funny to them in this particular clip. But then some of the stuff I said was not funny to them and they stopped booking me. And then when they tried to book me, they asked me to say something I wouldn't say. I got into a whole fight with them.
Hold on. I just had to download it. Where is it? Oh boy. Come on.
Is Bob Icino. He is Chief Market Strategist at YourTradingRoom.com.
Oh, well, you were so young then.
I know, right?
I wonder if I
Look
want.
at that. There you go. That's good enough.
Is it gonna?
Are you impressed that we at least
Can you hear
stabilized
it?
after Wednesday, Bob?
A little bit. I'm sorry. I'm still focused on my man crush and Jack Welch. I think that's all I'm going to be talking about for the rest of the day. But yeah, I
Look
just
at that. There's a nice little NAMBLA ad right there. Go
no.
ahead.
I would scream like an 11-year-old girl if I ever got to meet him. But the market's stable. Personally, from my perspective, when you're looking at the S&P, you're looking at.
So basically, I would crack jokes just like I do in here, and I would try not to cuss. And they just started to tell me I needed to do certain things. I had to wear a tie. Then they asked me to wear a sport coat. Then one day they asked me to come up with a copper trade, right? And the copper trade, copper was up, I think it was up 8% that day. And I said, I wouldn't do a copper trade when copper's up 8%. They said, yeah, but we need a trade from you. I'm not doing it. I said, well, we can't book you if you're not going to come out with a trade. We need you for a trade. I said, okay, fine. And when the show came, I said, if copper fell 7.9%, I might consider buying it. And they went nuts on me afterwards. And I said, you know what? Don't book me anymore. Just don't. I don't care. So anyway.
Well, I remember sometimes when you used to like text me or say, "You have a trade in this," and I go, "No, there isn't. I can't find a trade. There is no trade in
Because I
this."
couldn't find a fundamental trade. If you couldn't find a technical trade, what the hell was I going to say?
I'm like, "There's no trade." So that's the
No
thing.
trade.
it's like when people say you got to find a trade in something. And I'm like, the trade is, it's no trade right now. It's sit on your hands until a
Right.
setup occurs. I can't manufacture a trade for the sake of having a trade. It's insane. Oh, there you go. See?
Now I'm so worked up. I'm in a Twitter argument about price gouging.
Who's price gouging?
Well, they say the oil companies are price gouging because they have record profits. What I'm saying to him is there's been multiple investigations trying to look into deliberate price gouging, and they've all come up with nothing. And you can't tell me there's price gouging just because prices are high. Here's the funny thing. If you want to say price gouging now, then you have to allow the crude oil companies to run gas at $4 a gallon when a barrel of crude is at $26, which is unprofitable for U.S. companies. Now you have to allow them to sell it at $4 when it's unprofitable. Ridiculous. Waka waka, the secret to losing weight is moving to Florida and riding your bike in 100-degree heat. That's the secret.
But that's water weight, Bob.
Still, it stays off. It melts. Thank you for that, Rich.
What's the secret? Let's see. What's your thoughts about Amazon and Apple stocks? Well, Apple.
You should go do this. You should go do this without me now, Mike.
I will.
Going to church.
I was just glancing at it. I actually didn't look at Apple this afternoon. I was too busy with the sell-off in the S&P and the Nasdaq. So,
all right, guys.
All right. Well,
thanks, everybody.
You're going to be back.
I'll be here tomorrow.
Tomorrow morning.
Yeah, text me to remind me because I've got a Bloomberg thing I have to do tomorrow morning.
All right. Will do. All right. Thanks.
See you guys.
Small Mike. Hey, guys. Hey, everyone. Well, that was an interesting show. I hope you guys give me some feedback, whether you liked that, didn't like it, want less of it, more of it. So I'll get back to the broad markets. I mean, everything's going to go the way of the CPI print tomorrow. If we get a rip your face off rally, Apple will rally. Right now, longer term, I'm still bearish in Apple. Coming up to the rotation zone. So even if we rally back up, even if we get another couple week rally, I'm still watching for another rollover play in Apple. Why? Because we have a massive double top on the weekly pattern. We hit the first level. The only thing that invalidates this is now a weekly Apple close above 1209. Now tomorrow, it's all going to depend on that CPI print. Strong, better than expected CPI. If we get that rip your face off rally, then Apple's going to rally. So will pretty much everything else. There was no great pattern in Apple, and now we have a flag pattern. So going to be watching to see if we break out of that tomorrow. The key area for the downside is if Apple closes tomorrow below 139.80, 139.70 something. Just go 139.70. Then I'm watching for a retest of the lows. That's the continuation trade. If we don't get that, then it's got to be, if when markets pop, then it's just another breakout trade. Probably then back up into the weekly rotation zone over the next couple weeks before the bigger rollover play. And the bigger rollover play takes me to the next two targets, 127.97 and 120.59. And eventually I see it reconnecting with a 200 simple, which is right in front of now this right behind the 62.5. So I'm longer term, I'm going back with Apple being $100. Amazon, again, it completed this double, and now I don't have anything. Besides, it's now almost a very horribly sloppy head and shoulders breakdown play. But this is going to trade the same way. Everything's going to key off those numbers tomorrow morning. If Amazon closes below 111.65 area, then I'm expecting a return to the lows. If we rally roughly above, if we start rallying above today's highs, then I'm watching for a potential move back to the 50% decline over the next couple weeks before the next major rollover play, and that area would be right in front of 135.90. Those are But this is tricky because right now everything's literally going to key off what happens tomorrow. Here's what I was talking about. We've triggered the double top now. When this was the momentum bars. See the afternoon coming in, 2 p.m. End of 1:55, 2 p.m. Central. Just momentum bars breaking. Here was the trigger for the double and here's the momentum bars, pause, and you know what I've said about the first pause with the momentum bars, and I'm sure everybody who's been a long time were able to spot these spot those momentum bars pausing at the first little cluster, and then the next move is if you didn't get on this one because you weren't reading the price action or waiting, the next move is the one to get on, and kaboom. All the way down. Here's the first target with the next harmonic. I'm essentially, even if we roll over an early Asia, I'm considering it met at this point. And now we're going to have to see. But on the longer term basis, the next two targets are 39.83 and major 39.56. Close below 39.56 if this sell-off continues tomorrow on a closing basis. For not only would it complete the double, but then if it closed below there, it would invalidate this double bottom that was triggered, and it would then preclude us going to retest 38.57 area and possibly 3800. If we came down tomorrow and did not close below this, those other doubles are still in play. Other thing to keep in mind, even with a rip your face off rally, the first key area of resistance is now between about 40.72 to 40.85. Not doing any positioning for tonight though. This is sit on hands. Daily cycles now to the bottom, but not yet turned up. Weekly still trying to close in on the top. So we very well could see if it's a rip your face off rally tomorrow, but we're just going to have to see. After our Amazon stock split, you see Amazon going lower than 100. Lower than 100. I see it easily if we get the longer term. Once we get the longer term rollover, I easily see the retest of that. And if we get the slowdown I'm expecting, I think it's going to go even lower because of the consumer, and they already don't run. Their profitable stuff is the web services, and you're going to even see that slow down if we hit a significant recession, and the rest of their stuff doesn't already make money as it is. The only thing that makes them money is web services. So, and things will get even tighter, and your P to E is still astronomical, so you can start getting a slowdown. Yes, there is a significant room to fall still in Amazon in the long term. The major option expiration is next week. Okay? It's just the weekly is expiring tomorrow. That's going to just be minor. That's not going to be the big thing. Next week, you have a major options expiration. Okay? The June, because it's end of quarter. Okay? You have end of quarter options expiring next week. And end of quarter then is end of June. But the options that were all positioned are next week. So even out of the way of the CPI, and we have the Fed meeting next Wednesday, the 50 basis point is still baked in, but then you have the massive options expiration, and you actually have a bunch of volatility options expiring on Tuesday before that. So next week's going to be fascinating for trading. May you live through interesting trading times. NASDAQ. Just clean some of this up. Again, you got the same momentum, the pause right in front of the first harmonic, pause the second harmonic, and then not yet hitting that first target. But now let's just clean up this chart a bit. I'm not going to do a ton of analysis because I want to really see the price action, and anything I could do right now can be completely invalidated by 7:30 Central tomorrow. and I'm not really positioning a lot of stuff ahead of this CPI print. The if on a rally, 12,440 to about 12,533 is the major resistance zone. But we'll do some analysis. Maybe I'll even jump on a little earlier tomorrow. Let me see how the morning looks and what's going on and how volatile it is. The next target's to the downside. First cluster stop reduction is 12,216, 12,112, and then 12,002 are the targets. On a closing basis, below about 12,035, that would, if we close tomorrow below that, then we'd be targeting the return to this lower price action. Dow again broke out again. Now this is a pullback correction technically because it was still horizontal until this afternoon. Dow stopping at the harmonic pretty nicely. You see here, bouncing there, pause at the first one and then just stopping at the second one. But let's just go through the bigger targets. So you have them in 32,078, 31,872. Major target at the 62.5 is the 31,645 area, 650 area. A close below that, then a retest of the lows. On a rally, your major resistance right now is about 32,750. Russell did not trigger the double. Crude inside day pausing, pulling back to test key support and a nice pausing bar there. On a pullback, I'm just watching a return to the channel if it breaks down tomorrow. And on a rally, a breakout above. Remember, inside bars. I would, if we broke to below today's low, then I focus on this area. If we break above today's high, then the first target is yesterday's high, then 124.50. We'll check that other stuff because this is going on, an hour. The double still in play on the notes, so going to be keep watching that really closely with tomorrow. If we break below the two bottoms that form the double bottom right at this 87.5 harmonic, then I'm targeting a return to the lows area around the 9th of May. Dollar index finally triggered this double. This move down today did not. So I'm going 103.47 first target, 103.84, 104.20. It's going to be interesting to see how that reacts with the CPI number tomorrow. What caught my eye this afternoon, the VIX just launched. Here was your launch move. Remember, I started to talk about it. We get above 25. We start to get those momentum bars, and look at the momentum in the VIX. That's why it was going with that afternoon move. Return real quick, return to 5-minute rotation zone, and then just a power move higher. So that was a very bearish turn in the VIX. All right. Tesla. Oh, by the way, that was a nice play today with the gap fill play in the afternoon. Remember, the first thing I talked about, just for a learning thing, coming back down, I said watch your gap harmonics for a reversal between the 50 and the 62.5. Did not close below the 62.5, little spike, and then the strong reversal. Then you update the harmonics. This is just doing this, whatever you're following. This afternoon, around 11, you got the close below there. So then it was target for the gap fill, and you got that full gap fill and more with Tesla. It's going to be very interesting also with all the additional stuff with the Transportation Safety Board and everything else doing the engineering review on autopilot. So we'll have to see if then that's the one step before a recall, which could be on full self-driving and autopilot, which would make it very interesting for Tesla then. So, and you see just spike above that daily rotation zone, but still holding that nicely. Remind me of these things tomorrow if you want to put predictions. Yep, we'll see one. Can you check NVIDIA, Roku, Netflix? Real quick, then I'm going to wrap this up. NVIDIA, again, nothing invalidates this double until you get below 172. If we sell off in the morning, pay close attention. There's still this gap fill right here, and you have right below that the 50. But you get below, if you get a close below, what's the exact number? 172.04. I just go with 172. 172. The bullish plays over on Nvidia. What else do we have? Roku just did the reversal gap fill again off the rumors. You have the Netflix. Netflix isn't going to buy Roku. All right. And longer term, still watching for Netflix again is getting more. Roku is just, they're not, Netflix is another reason they're not going to buy it is because, well, you're not going to pay up in this kind of environment with consumers slowing down. You're not going to pay up at this kind of price for Roku. Longer term, Roku triggered a massive double top way back in November, and we've hit the first and second targets. I'm still watching for 58.10 to 48.92, but 58.10 was the full target. And that won't even make it cheap then. So I am not bullish on anything with Roku. Netflix, I'm getting a little more interested if we get another significant push down. So I'm going to be watching. I'm actually watching for it to roll over when we get the next major sell-off and easily fill this gap and rebase around 162. P to E back to 18. I think Roku's going to hit a PE to 12 to 13 before this is all said and done, and then it might be attractive to somebody to pick it up who's got some extra cash that needs to put it to work. Yeah, Netflix needs to save themselves before they do anything with Roku, and they're not going to take all their stuff and try to buy something that's sitting with a PE over 100 and it has room to dive. Why would you do it now? Why would you do that now? Think about it from Netflix. They're already a cash burning machine. They're already losing subscriber growth. They have to preserve capital, and you have something that's another incinerator of cash in Roku that could get a hell of a lot cheaper. You'd wait. And it's not like people are running out to buy hardware stream makers. And Netflix is already on every Roku box. What do they get? It's not like they're going to buy into a new market. So it never made, the rumor never made sense. That's my little take. All right. I hope everybody had a great day. Let me peek in an ARC. I did not peek at that this afternoon. Kathy. Boy, when this gets outflows going again, that's going to be super interesting. Finally returned to the weekly rotation zone. Be interesting, even if this bounces again. It's just setting up for, it's just when that real short kicks in again. I'm starting to get interested if we get momentum back below 42.51. But the real killer is below about 39.75. Oh, DocuSign again. This was I had a potential double long way off again with this price action. Now this is turned into a triple, so that's off the table, and I'm expecting DocuSign to still be lower. My next significant price target on DocuSign is down around 46. All right, and look, see why also? What's this? Where's that P to E ratio? This thing's going. This thing's going to retest. Not only does there a harmonic down here, but this is the major base from the IPO. So I'm easily expecting it on the next major down move to retest this. Easily. The only thing I did keep an eye on was if we did trigger double. Might be interesting from a quick trade, but we had the flag pattern, and now with earnings, dropping down to retest the lows back from the 12th of May. So there's nothing there. Stitch Fix is another one. Stitch Fix, I'm expecting to easily hit 580. And this is round tripped. I mean, this thing is another disaster. That thing will probably drop even below that. I mean, I wouldn't be surprised to see it if once the recession really kicks in. I wouldn't be surprised to see this 350 price tag on that. And again, woo, what's this? A little dash there. What does that mean? There's no price to earnings ratio? Well, when you don't make money. Oh well. There we go. Good afternoon and evening. They're learning from the White House on cash burn. Yeah. You are welcome, everyone. So, yeah, if you're Stitch Fit, do not go heavy, from my perspective, into Stitch Fix or DocuSign. They're just another gonna burn through it. Don't, you already know my thoughts if you've been here a long time. Thank you for everybody. Thanks for all the back and forth. I know I didn't get to every comment, but we had a lot of Bob banter. I will be on for those CPI numbers tomorrow. Let me just put those up there. Where is it? Again, CPI, 7:30 Central, 8:30 Eastern. Don't just ignore consumer sentiment preliminary at 9. That can also have some effect on the market, especially the inflation expectations. If that comes in a lot higher than previous, that could, if we are getting a rally off those CPI numbers, that could dampen it. All right, so do not get blindsided, and also remember, we're still in negative gamma, and the gamma will reset a bit next week with major options expiration, but we still are in negative gamma, and the dealer hedging, the closer we get to negative gamma, that can really kick in. So that's where we sit. You see SIA red this afternoon. With that, except for Home Depot and Lowe's and Costco. Everybody's going to Costco to buy their $1.50 hot dog. All right. Hold on. One more. Hey, Shop. I'll just glance at Shop. Shopify. What do I think Shopify long term? We still have that double in play, but I'm expecting the rollover. That's the only bullish case, a close above 4. That's the only short-term bullish play, but I don't really see that kicking in. 413.70, 461, 485 would be the two targets I'd use, because that's also to the gap fill. That's the only thing I'm keeping an eye on bullish. I'm very bearish on this longer term. It's overdone, and cycles are still at the top, so this could still kick in a little before a rollover, but I'm expecting another pretty decent turn down. My next target, based off the harmonics, closing below 62.5. The next harmonic is 244 roughly, and then 199. You are welcome, Anissa. Thank you all, everybody new. I hope you do enjoy it. And by the way, if you are new, please do consider subscribing. We put a lot of time and effort into this, and it just helps the channel grow. I'd really like to get over 5,000 subscribers this year. And if you know anybody who would benefit from this, please share the link. And Bob will be on tomorrow to discuss his thoughts on the CPI figures. So make sure you tune in for that. You are welcome. Is that Swaghetti? Did I say that? Swaghetti? You are welcome. Mickey, it's Mickey. Mickey 78. That's remember. I have to remember. It's Mickey. Mickey 78. You are welcome, everyone. Again, you are welcome. Waka Waka, Dr. Michaels, Rich, Kalani, everybody. I think you're new too. Balaji? Did I say that? Again, if I butcher your name, I'm really sorry. I'm horrible with names. That's why my parents named me Mike. I'm horrible with names. Thank you. Yep. Daniel, yes, quad witching next week will be very interesting. And I think I'd answer your question. I'm long-term sell on Shopify. All right, with that, I will talk to everyone in the morning, Everybody have a peaceful night, rest well, and prepare for an interesting trading day tomorrow. Bye for now.